The first quarter 2025 Miami luxury condo market stats say the market is up, and so are prices. But stats can lie, and the ugly truth is that the market is not so rosy. I have all the details you want to know right here. We've analyzed the first quarter sales for Miami's luxury real estate market, and as of now, the stats look stable to up, but as they say, the devil is in the details. And I'm here to tell you like it really is. So stay tuned for the full picture of your latest 2025 Miami luxury condo market update. I'm Sep Niakan, founder of Blackbook Properties and CondoBlackbook.com, and the only Miami real estate brokerage and site devoted to luxury condos. Welcome to our first market update for 2025. Please stay with us in this exploration of what's happening in the market as we get into the days on market and the months of inventory a bit later in the video. You will start seeing where the market has shifted, and combined with our expert day-to-day insights, we'll give you a clear sense of what the Magic City's luxury condo market is really doing. And at the end, I'll explain why all this is happening and what's next for the market. If you're new to the channel, welcome. We'd love to have you be part of the Blackbook Properties family, a family that you actually get to pick, right? And the best way to do that to start is to subscribe. You'll be getting tons of expert insight on all things Miami real estate. Speaking of family, what's the difference between outlaws and in-laws? Outlaws are actually wanted. And if you prefer to read, head over to CondoBlackbook.com to our blog section to read our full, in-depth Miami condo market reports every quarter, plus lots of other insights and guides too. A key indicator of the health of the luxury market is sales volume. It's how many sales are happening. So what we're seeing in general is that sales volume is still healthy, but we're also seeing more sellers enter the market and creating an inventory imbalance in favor of buyers. More on that in a minute. In the first quarter, in terms of sales volume for properties priced $1 million and up, there wasn't anything alarming nor exciting to report, to be honest, and that's good. There were 364 sales, up 2.5% from the fourth quarter 2024 and up 2% year over year. If you've been following me or the market, then you know that over the last few years, Miami's market has shifted to more luxury and to higher price points. So for all of our reports, we're now analyzing properties priced $2 million and higher separately, which is essentially the new true threshold for a luxury property here now that prices have increased. This segment traditionally sees less volatility, and that's what the first quarter showed us in terms of momentum. Sales volumes for this segment were up 10% from the end of last year, with 162 sales versus 147, and year over year, pretty much flat. Again, nothing alarming, nothing too exciting, stable. So when you look at these two segments together, from a data standpoint, we're seeing healthy sales volume. That makes sense, there should be, since there are more sellers and more condos to choose from than in recent years, and sellers are being more flexible in their prices. So that's the story of the steady sales volume we're seeing, but please keep following me here because that's not the whole story. One of the biggest questions from buyers over the last few years has been, are prices gonna drop? And the answer to this depends on which segment of the market you're looking at, and if you're taking the stats at face value or digging a bit deeper, as we are going to do today. In the 1 million to 2 million range, the data isn't pointing to a drop in prices, but the reality on the ground is different indeed. When we compare apples to apples properties, meaning if you go to the same properties in an existing building last year and compare sales prices to this year in that same building, we are seeing price drops across the board, anywhere from 5 to 15%, depending on the building and neighborhood and property type. I think that's what makes the market a bit more challenging to follow using metrics like overall and aggregated stats, is that we have more brand new luxury condos hitting the market. Not a lot of buildings, but enough extra inventory of high-end luxury properties that are newer and more expensive on an absolute value and a per square foot value than the existing inventory, and that ends up skewing the stats higher. And when I say brand new, I mean properties delivered in the last 12 months or so. So for example, for the 2 million and up segment, prices are not dropping in the stats, even though we are seeing a different picture on the ground. Let's take total median sale prices. For the 1 million plus segment, the median sale price dropped almost 5% from Q1 2024. While the data is showing that drop, we actually have dropped a bit more than that in many cases, as I had mentioned a minute ago. In the end, it would make sense that we would have a pullback since the market has been on such an upswing for the past 5 years. In general, we've seen steady year-over-year increases since the pandemic. When we look at a stat like the median price per square foot now, prices rose more than 9% year over year. This quarter, we actually broke over $1,000 price per square foot mark for the first time ever at a median of $1,080. Again, what these stats are showing is that the newer condos that have opened up, like Missoni Bahia and Edgewater, Aston Martin Residences at downtown, and 5 Park in Miami Beach, are pushing our median sale prices higher when strictly looking at premium and luxury condo product. In other words, Miami is becoming a higher-end market by the day. In the 2 million plus segment, median prices, both median sale price and price per square foot, also increased by about 8 to 10%. So we're looking at solid jumps year over year. But again, this is the same story I told above, where new condo buildings are pushing our prices up while existing properties are actually down in prices in general. There are, of course, certain condo buildings that are holding up quite well. And once you get into the ultra luxury product, you may even see price gains. But those are not the general rule for luxury properties at the moment. Now, let's get to the juicy parts of the stats. Let's talk about days on market and months of inventory. Both are clear indicators of which way a market is heading. Days on market reflects how long a property is on the market before it sells, and months of inventory is how long it would take to sell all the existing inventory that's available based on the flow of sales as they've been recently. Both the million and 2 million and up segments saw days on market and months of inventory rise, more so when comparing the first quarter to the end of last year. Both of these are telling the truth about the state of the market right now, as when each of those stats rise, it's a clear sign of weakness in the market. For the million and up properties, the first quarter saw a slight uptick in average days on market for luxury condos, rising to 82 days. That's up from 71 days in Q4, and also up ever so slightly from 79 days the same quarter the previous year. So yes, it's taking a little longer to sell compared to the same time last year, and momentum has slowed quite a bit from the end of 2024, and some neighborhoods more than others. For luxury condos priced 2 million and up, days on market quarter over quarter actually dropped, but annually days on market increased. It's the same story. Okay, so what about months of inventory? Another key indicator of the market's health, and this is where we really start to see the buyer's market taking shape. A healthy, balanced market has between 9 to 12 months of inventory here in Miami. It's different in other parts of the country. I've been noting for several quarters now that we're entering a buyer's market. And despite pricing increases and steady sales volumes, this is where you see the clear picture. The first quarter stayed pretty consistent with the last quarter, ticking up to 23 months of inventory, up from 21 months in Q4 of 2024. That's a steep increase from the 14-month range we saw in mid-2024. And when you look at it annually, 2024 ended with an average of 17.6 months of inventory versus 14.6 months of inventory at the end of 2023. For buyers, that higher inventory means more choices and more leverage when I'm out at the negotiating table for you. For sellers, it means you've got to price right or offer something unique to stand out. That said, it's worth noting that inventory tends to climb through the end of the year and then ease back as we move into the second and third quarter. We'll be watching closely to see if that seasonal pattern holds in 2025, but the reality is that what we've been seeing on the ground this quarter is the slowest high season for sales, which is roughly January through May, that we have seen since the very early days of the pandemic. So I do not expect to see a regular drop in months of inventory, which means we'll have high inventory and price pressure for a little while longer. To break down why all this is happening, bottom line, buyers are hesitant. They've been waiting for interest rates to come down, but they have remained stubbornly high. They've also watched association fees go up a combined 50 to 60% over the past few years and are wondering, will that ever end? It's a scary thought. But side note, insurance rates have come down double digits, and very recently, new condo laws have passed, giving more financial flexibility to condos. So you will see the stabilization of association fees going forward. The current administration and stock market has also taken us for a roller coaster, with many would-be condo buyers waiting for the dust to settle. Lots of condos are also doing updates, which means construction inconveniences, which is also adding to some of the buyer hesitation. I mean, what's the point of buying into a condo that's in the middle of a pool repair if you want to buy a condo to go relax by the pool, right? In summary, there are a lot of very, very interested condo buyers waiting on the sidelines, so we do have pent-up demand, but they are waiting. On the seller side, sellers are ready to sell. Many sellers had solid gains over the past few years and are ready to move on, and holding costs in the form of association fees went up, while rent stayed pretty flat the past couple of years. So some investor owners are just simply ready to move on. And we are definitely seeing some bifurcation in the market as well. Trophy and new product, luxury product are moving, including pre-construction. And then older inventory, especially buildings 25 years plus, with either issues or high assessments, are lagging, partially also because of the perception they have in the market because of the new condo laws. So where do we go from here? I think the market is going to continue to have a rocky year with continued price pressure. If you're a buyer, you will have a pick of the litter, which is great for you. However, there is a lot of pent-up buyer demand, buyers wanting to buy and just having a reason not to at this moment in time. That will change. Everyone wants to be here and live the Miami lifestyle. If any of the needles move, interest rates going down, stabilized stock market, less chaotic decisions from the presidential administration, proof of stabilized year-over-year condo fees that I already know will definitely happen, and simply the news of lower prices getting out to the general public that we are seeing already on the ground, but not yet in the stats, any of these can bring buyers roaring back. And barring any major negative macroeconomic events, which certainly are possible, I do believe that 2026 will bring lots more stability and better news for the Miami condo market. If you found this video helpful, and I hope you did, let us know in the comments. Or better yet, just give us a call and let's talk about your next purchase or sale. Remember to subscribe. See you in the next video.